Eric with Jazz Wealth Managers here, where we are doing fin tips every single day, Monday through Friday. Today I want to talk about the Inherited IRA, and this is the craziest one I've done yet. So if you happen to see any of the other Inherited IRA videos, this is probably the best one, the best bang for your buck. So what I've got to explain to you with the Inherited IRA, first I want to just recap a little bit of it because we've talked a lot about it. Maybe people are confused, or maybe this is just the first video you're tuning into with fin tips in regard to the Inherited IRA. Well, the Secure Act changed a lot of different things when it came to the Inherited IRA. The fact is, if you are not a spouse or a minor child and you inherit an IRA, or you don't have a disability, or you have a disability, that word, that's what I was looking for. If you don't have any of that, what ends up happening is you've got 10 years. 10 years to withdraw the money from the Inherited IRA. Every time you make a withdrawal, you're going to have to pay taxes on that money, and it's going to show as income. So if you're making a lot of money and you have to take out money, you're going to be jumping up in the tax bracket. So you want to be very careful. So this strategy right here is probably the best one yet, because it's a way for you to avoid taxes altogether with part of the money from the Inherited IRA. Now, I know what you're thinking right this second. You're probably thinking I'm completely crazy, but it's legit, it's legal, and it works. So what is it? Well, it's called a QHFD. It's a Qualified HSA Funding Distribution. Now, what exactly does that mean, and how does this work? Well, it's only a one-time deal. You can only do this once. But what you are able to do is take a part of your money from an Inherited IRA and put it in an HSA. The biggest thing about it is you have to make sure that you have an active HSA with your employer. If you are single, you can put up to $3,650 into an HSA account for the 2022 year. If you have a family, then you can put up to $7,300 a year. So the way that this would work, let me show you right here, is let's just say that you've got $10,000 in an Inherited IRA. Well, if you've got $10,000 in there, if you had to pay taxes on all that, that wouldn't be too fun, would it? But what if you did this QHFD? It's kind of a weird term. I don't even know how they came up with this, but it's quite a bit, and it's a lot to say right this second. So if you had the $10,000, and let's just say that you've got an HSA with your employer, what you can do is, if you have a family, you can take $7,300 from this $10,000. You're going to put it in your HSA. That's going to be that one-time distribution from an IRA into the HSA. What this is going to do is allow you to use this $7,300 that you've never paid taxes on, that technically you were supposed to, and you're able to use this for health care, whatever point that comes within your life where you need that money. A lot of people are using these accounts right now. They're actually using them as a supplemental income because healthcare is so expensive. You're able to invest with an HSA so you can actually get into the stock market and grow your dough. So it's pretty sweet that you can take $10,000 and now you would have, what is that? Let's see here, $2,700 left. That's all you're going to have to worry about withdrawing and actually paying taxes on, because we just removed that $7,300. Saves you quite a bit in taxes. Again, where I say that is probably the craziest, coolest strategy, 100% legal. It's a real quick video, but it's my favorite one yet. So let me know what you think about it in the comments. Be sure to hit the like and subscribe button. Thank you for watching.